some of you, the commute into the press club or the media is a long commute, but I've just met one person that lives at Kengnam 72 and he was able to stay in bed until 8:30 this morning, so maybe we'll stick to using the Marriott more often. I've been asked to just make sure that any of you that need headphones, they're asked them outside. We'll be putting the English slides here, very, very gloomy faces, but with a modicum of confidence that things will get better. And as we stand here today, on the 11th of July, there are a few more smiling and happy faces. Whether it's because we've come through the challenges with our neighbours from the north, whether it's because your sales numbers are better, or whether it is because there's more liquidity in the market. And hopefully I'll go on to discuss that. We did this presentation in Ho Chi Minh on Wednesday morning, and obviously on Tuesday night some of you were sitting up in bed or in the bar watching this football game. I was sorry, my slides are sorry, a few technical issues. And actually my daughter, who I was sitting up in bed with, gave me a cold, so if I can't hear you, then it's because my ears are blocked. But this game of football taught me a great deal. It taught me a great deal about life in Vietnam. It taught me a great deal about the property market in Vietnam and what we've been through in the last 6 years, and I will try and explain why. When one market disappears, you need to go looking for another market. So you need to go looking for a substitute. And when market disappeared in May, Vietnam needed to go looking for a substitute market, whether it's for buyers, liquidity, funding, or tourists. And what Paulo Scolari didn't learn on Wednesday night was that when your goalkeeper lets in 4 or 5 goals in 5 minutes, then you probably need to go looking for a substitute. In our business, flair is great, talent is wonderful, at the right time in the right market. When the market's bad, and the market's hard, discipline works better than talent. And again, the German approach to football, certainly on Wednesday night, taught us a thing or two. Another thing that I learned was business is business. World Cup is business. It's way more than sports, fortunately or unfortunately. But the reality is, don't get sentimental. And many of us, certainly in the last 5 years in Hanoi, there are a lot of empty buildings, beautifully designed, you may argue beautifully overly designed, that are sitting empty. So people mustn't fall in love and be sentimental in real estate. Real estate is business. Business is business. I learned those lessons at 5 o'clock on Wednesday morning. We've been through a great deal in the last 6 months. Not all of it good. Some of it certainly was good, and some of it has certainly been very, very difficult. If you were sitting in Hanoi, you may not have felt the tension that there was in Ho Chi Minh in the middle of May. Certainly, the global newspapers, the regional newspapers, loved every minute of it, and certainly in the Singaporean newspapers and the Hong Kong newspapers, it was on the front page for about a week. Even my mother in the UK sent me the paper cuttings. What we also realized was, quite quickly, that other countries, as much as they may agree with the situation that Vietnam finds itself in the East Sea, they also are trading with China. They are trading with China every day. So, very quickly, our friends around Asia Pacific, around ASEAN, huddled around Vietnam, but within a couple of weeks, the reality is that the other big nations that also have challenges with China are also back trading again. And so the reality we find ourselves in is that Vietnam is on its own trying to sort out this issue with the Philippines. The other countries such as Korea, and here you see Germany, a country that has had its own issues with another big neighbour to its east, realizes that trade is more important. So again, I think we're going to have to find a solution for the problem with the East Sea on our own. As much as America and other countries that trade with us and see Vietnam as a good partner. The reality is we're pretty much on our own. The good news is that in some areas, such as real estate, the FDI numbers are quite good in the last quarter. Certainly in the last 6 months. We've seen a lot of new investors, a lot of investors that have been in Vietnam come back to the market and renew their investments, either with further investments or bigger investments. And certainly we've seen an opening up of the hospitality market that we haven't seen for a while. Overall, FDI is down, but the percentage that real estate makes up the free trade agreements that we were talking about at the end of last year were the free trade agreement with Europe, with Russia, and the other Azerbaijan, Kazakhstan, Uzbekistan, and of course the Trans-Pacific Partnership with the US. The US politics is a wonderful thing. You see me here standing outside the Capitol building 2 weeks ago. I had a chance to go and visit and lobby on behalf of Vietnamese business and on behalf of the Vietnam American Chamber of Commerce. And for only 90 minutes in the last 6 months has America come together. The blues on one side and the reds on the other. The Republicans and the Democrats. They only agree on one thing. And it certainly isn't about trade. It's not about immigration. It's not about Syria. It's not about the Ukraine. And it's probably not about Israel either. The only thing they agree on is Team USA. For 90 minutes, Washington came to a stop when the US played Portugal. And everybody... So those of you that follow the Trans-Pacific Partnership, please don't hold your breath. It would mean a huge amount to Vietnam if it was signed. It would reinvigorate the Taiwanese, Korean, Hong Kong Chinese industry in Vietnam that's making exports to the American market. But it's not going to happen this year because the Republicans and the Democrats can't agree on the process and what it will mean to Vietnam. You go to the Hill, and all that the congressmen and the senators can talk about Vietnam is either catfish or human rights. So it's really going to be 2015, maybe the back end of 2015 before the Trans-Pacific Partnership gets signed. As far as economic indicators, they're probably as looking as positive as any time in the last 10 years, with inflation tracking down, interest rates still low, but probably going down again, with, certainly until the beginning of May, tourist arrivals going up, exports and imports in balance with each other. A small thank you to Samsung, who's almost individually pumping up our exports here. The increase of exports of electronics and handphone appliances really very dramatic and making a big impact. Previously we were very monoculture. We were garments, footwear, and textiles and apparel. Now we've got almost an equal number. We've got the electronics business as well. And we hope that real estate will be a large part of that. The Eurochamp puts out a very good business climate index. And you can see here, after bottoming out in 2012, it's climbing back again. Still well short of where it was 5 years ago, but at least it's moving up again. These are the sort of indicators that finance directors around the region look at when they make decisions to invest in Vietnam. It's just one small part of a huge process to get Vietnam back on its feet again in terms of manufacturing. As much as we may be proud of 5.5% GDP growth, the reality is we probably need 8%. With 1 million school kids and graduates leaving university every year, we need a much, much bigger figure than 5.5. 5.5 gets us on the radar, but it doesn't create enough jobs that we require, certainly for the manufacturing sector. My right finger seems to have energy that I didn't know I had. Sorry. Someone overriding this, or is it me? Okay. Another area that we track very carefully that's giving us some confidence in some areas and very little confidence in other areas is the legislation that the government is slowly putting through. As far as the asset management company is, we're yet to be convinced that this is the right solution, and if it is, it's behaving very, very slowly. We believe that some of the non-performing loans may be offered to the international market, but we haven't seen that yet, and we're still waiting to see what that would look like. We're holding our breath there. As far as the package to help first-time buyers and affordable housing developers, again, very, very slow. The disbursement is really snail-paced, and we're not sure what this will look like in the end. We think it's a good idea, but there's just too much paperwork, too many forms to fill in, and we can't really see the progress towards it. We saw 1% devaluation of the currency earlier in June. The market has moved on quickly since then. As you can see there, there wasn't a major fallout. Again, we seem to have got the capital markets and the other central banks around the region to forex traders to believe in the medium term for the dollar. As far as the BCI, this is the Business Construction Index, or Building Construction Index. As much as I love my own research staff, the reality is I do like to benchmark these numbers against other sources of information. And we use this index to track trends and certainly to look at markets where we may not be so strong. So you can see here, the amount of construction either started or planned is down in every city, quite markedly down, except in the Nanchang area, which again I'll come back to, and that's mainly to do with hospitality, second home, where there seems to be an uplift in confidence. But you can see here, these are numbers that come out every quarter. They give us a good benchmark in terms of what is actually happening across the board. This tracks small, medium and large size developments. It doesn't tell you whether they're for own use or for speculative use or indeed a build to suit, but at least they track the amount of cement being poured. In terms of infrastructure, Hanoi is beginning, I hope, and certainly when you come to the Marriott, you can see the benefits of the flyovers and the expressways and the highways. We're beginning to believe that very slowly, within the next 5 to 10 years, we will have true supplementary roads with radial roads around the city. The next thing that will come, that needs to come with this, is the discipline that goes with it, because as much as we have these large roundabouts and these flyovers, etc., the road and certainly the flooding last night, within half an hour of that very heavy rain, there was flooding certainly on many. It's happening both in terms of bridges, flyovers, tunnels, as well as these big bridges across the river. It's also happening in Ho Chi Minh City. It's also happening in Ho Chi Minh City. And what certainly a metro will do different to a road is what a metro will do. So, I apologize, this thing's got a mind of its own. Stay. If one of my colleagues would like to help me, that would be great, otherwise just stay where you are. What a metro will do, where we believe that the exits and the stations will be, the value is already going up within concentrically around these nodes. Again, you've seen it in Hanoi. Hanoi land prices are geometrically higher than Ho Chi Minh already, but certainly in the outlying districts we'll see for the first time, instead of just values going along the road, like a lobe, we'll actually see them going out around the stations. Another thing that we're seeing is that as land values go up, greenfield sites, and particularly brownfield sites, become more valuable. So we're beginning to see, we've seen it here in the CBD, we've seen it at World City, in Time City, where Vingroup took old warehouses and godowns and made them into big new mixed-use projects. We're seeing it also in Ho Chi Minh in the port areas. The port area of District 4 and the new Saigon port are going to be turned into large mixed-use, mainly residential projects. So again, a thinning out, a moving away from a mixture of industrial warehousing in the city to a mixture of residential at different levels. And it'd be interesting to see how quickly that happens. But you can see from this slide here that the ports are being moved downriver as the river becomes more congested. But again, this is tracking what happened in Hong Kong, Singapore, Thailand, and again, we're excited to see that it's finally happening here. If I can, the machine will allow me to. I will now talk about the residential market. I think we've obviously borrowed a laptop from Sam. This is the slide I want. You can see here that over the last about 15 years, the total supply of condo projects in Hanoi and Ho Chi Minh is really quite small, about 105,000 in Ho Chi Minh and about 126,000 in Hanoi. So this is the total supply. We've broken it down by luxury, a word we don't use very often, by mid-range, and by the affordable sector. My colleagues in Hanoi slightly differentiate the upper affordable and the lower affordable, and so they've broken it down to two segments here, but in Ho Chi Minh we just call it affordable. When the Hong Kong government introduced extra stamp duty in order to reduce the speculative bubble in Hanoi, sorry, in Hong Kong, the effect was equally dramatic, but over 12 months. So they had a 20% drop in prices in 12 months. And as soon as the market had adjusted to that, prices were back off again, and there's queues outside all the developers. That 12-month period has been elongated in Vietnam to 5 years. A mixture of lack of confidence, high interest rates, very high inflation, poor finishing, and a whole list of other things that really destroyed the confidence in the market. And if people felt that prices were going down, they didn't buy. So really a huge lack of liquidity. And the reason why there's a smile on some of the developers' face, particularly the township developers' faces this morning, is because this has now begun to disappear. This lack of confidence has been replaced with small, growing number of families that on weekends are prepared to go out and look at what's available. So I think that both in Ho Chi Minh and in Hanoi, it happened last year, the back end of last year, in Ho Chi Minh City, in the affordable housing sector, and it's now happening up here. Also that we believe that 79 or 80% of the sold units in in Hanoi over the last few years have been completed units. So again, no one believed for quite a large period of that 5 years that the projects were going to be finished. So the market moved away, they turned their back on buying off the plan and only bought units that were finished. So again, it meant that developers had to fund or find the funding for their developments the whole way through the project, and that there was no finance, there was no self-financing. An increase and also the unsold stock. Certainly looking back 2 years ago, we felt that the unsold stock in areas like District 2, District 7 in Ho Chi Minh, and the meeting area around here, where we are today, would take at least 5 to 8 years to fill, to disappear. We thought we had so much supply that it would take 8 years to be sold. It would appear that that was probably unrealistic, and it's probably going to be 2 more years before it's all sold off. And again, for that to be sold, it will take an increase in confidence, it will take more funding, more interesting funding opportunities from the banks that are now more interested, more excited about the home loan and the mortgage market. Again here, this is a wonderful graph, it just takes a few seconds to understand. The 126 number of 1,000 units that we had a few minutes ago, 16% of that in the Hanoi market we believe is still unsold. That's a total supply going back, what, 15 years. 15% of that is still unsold. Of that 15%, 50% is completed. 36% is still under construction, so there's a lead and a lag here. But 15% of that actually is stopped completely, and there's no work for the last year on that project. And moving forward, you can see here the breakdown of that under construction. And again, 2 years ago, 3 years ago, 5 years ago, most developers were aiming at a price of 150 to 200,000. You can see how quickly that's dropped down now. What was 200,000, 150,000 is now 90,000. So you can see now why we've broken that triangle at the start into a separate box, because what was unaffordable to many families has now become affordable, or more affordable. 12 years ago, at the start when we arrived, we looked at flat screen TVs, we looked at sales of motor cars, we looked at the demographic. Obviously the numbers have changed, but the concept hasn't. And you can see here the population of Hanoi and Ho Chi Minh has obviously increased in the last 12 years, probably about 15 to 20% of a population of about 7.1 million, taking out the students, and the government actually has decided that the working age is 15 years old and above. We've moved it to 21, so you can see here the numbers drop down to about 33.2 million, or 3.1 million if we take out the full employment numbers. And you can see here what we believe is an ambient demand, a sustainable ambient demand for residential apartments at about the $50,000 mark. And you can see what the market's actually supplying. It's only supplying about 3%, 5%. So we believe that when the market does come back into kilter, and it's going to take a whole load of things to happen, including Germany winning the World Cup, inflation staying low, interest rates staying low, FDI staying high and probably increasing, and the Trans-Pacific Partnership increasing as well to trickle down the wealth, that certainly developers have, on the whole, a very good 5 to 10 years ahead of them. But it will take these things to be clear. It will take the stock that's in the market to be sold, and it will take the stock that's uncompleted to be finished. Because I think maybe we need to readjust our view on that. You can see here, again, some of the other adjustments that have been made. I don't think they're anything like enough, but you can see here the average size of units has really dropped down. Probably not enough. Developers are still, certainly in the Ho Chi Minh market, where I meet developers every day, they're telling me they're going to build an average size unit of 100 square meters. The market does not need loads and loads and loads of units at 100 square meters, or 150 square meters, or penthouses at 350 square meters. The market needs units between 60 and 70 square meters. That's where the market is. And for every one developer that tells me they're going to build 50, 60 square meter units, I still meet 20 developers that are trying to build penthouses and meters above an average of 100 square meters. I urge you to think again. I also urge you to keep lobbying the Ministry of Construction and the real estate sector lobby groups, because the government is not making it easy for anybody by putting a density cap on a minimum density cap on what you can develop. And until we lobby this, until we make it extremely clear to the government that this is not helping the market and not helping young families buy their first property, we're in a conundrum. It's really important that the Ministry of Construction understands that as a market, families cannot afford their first home at 100 square meters. It's just too much. Even though prices have come down by 30, 40, and 50%, we still need the average size units to be below 75 square meters. I appreciate the margins may not be so high, but there's still a very, 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 very good sustainable market for millions of families. So please do your bit to lobby the Ministry of Construction. Quicker and better and faster and higher. And again, you can see here, whereas before, 5 years ago, a big unit was 100, 150 square meters. So for 150 units, now we're seeing the larger Vietnamese developers, and you can see here that most of these are Vietnamese projects. The Vietnamese developers, either listed or non-listed, they have the confidence and the funding to build really large projects of a much greater scale. Some of them you can see have maybe gone quiet, and some of them are now back on the radar track again. But you can see here FLC at 1,000 units. These are very big projects compared to what we had 5 or 6 years ago. Just Ho Chi Minh market recovered at the back end of last year, partly because many companies and families stopped building. Although you saw from my BCI stats that there's still a lot of buildings under construction, most of those buildings are actually for owner occupation. I sent my staff out about 3 weeks ago. We each got 3 roads to walk up and take photographs of various sites. We do this every 6 months. We talk to a big, certainly you talk to a developer that developed their project in the period 95 to 2005. They've been able to hold on to their tenants, and they're able to push up their rents incrementally. It's difficult to say that in Ho Chi Minh because CBRE is just going through a rent review with their landlords, so I don't want my landlord telling me that, Mark, you said. But the reality in Hanoi is still actually quite challenging for you. We still have some way to go. As I drove in from the airport yesterday, you really are building a brand new city in this area, and the buildings are very big, with very big floor plates, and an excellent deal if you are a tenant. A very, very challenging market if you are a landlord. I was speaking to one of our clients this morning, and I was asking him whether he was going back for a holiday in July and August, and he said, no, I won't be going back for 3 years. My job is to fill the building. So I think you're right. Filling a big office building in Hanoi is a challenge that's not going to be done in a year. It's probably going to take 2 to 3 years. And that's the reality. And that's with maximum full marketing 365 days in a year. There's a lot of space like that. 1,000 new square meters of brand new space at a really good rent. It's zero effect on our net absorption. But if a company goes from 500 to 1,000, then it's 500 square meters of net absorption. So there's been lots and lots of movement. We've done about 20%, 22% more transactions year to date in the office market, which is good. The reality is, though, that the net absorption isn't going up, it's going down. Lots of our clients are moving to take advantage of the new space and new good deals that landlords in Hanoi are offering, and upgrading and taking better buildings. But there's no new tenants coming in behind them to take the space that they were taking. Only 12% of the transactions we've done year to date have been new companies coming to Vietnam. In the past, this has been as high as 70%. So really, we are very reliant on companies that have been in Vietnam for 15, 20 years, that are improving their conditions, or indeed Vietnamese companies that want to break out of traditional old space, old Soviet-style buildings into brand new offices. That is probably a more sustainable market, and there's probably still many, many companies that are in 20, 30, 40-year-old buildings where the toilets don't flush, where there isn't enough parking, where floor plates, you're going to have between 6 and 10 tenants per floor. Okay, so that puts an awful lot of pressure on your lifts, on your toilets, on your car parks, on your air conditioning, and the ability to break up and divide units. It's very, very important. We're still really doing very, very few. You see the bottom right here, in orange. Those are transactions over 1,000 square meters. Last year, CBRE did, I think, 1 or 2 transactions over 1,000 square meters. One was a sale, I think, but the rest of the releases, they were all below 1,000 square meters. Now, certainly in Ho Chi Minh, we're able to do a lot more. Whether that's because companies that are seeing that the rental opportunity, the rental window, the good rent window is closing, that they're now taking advantage of it. But the reality is, if you're an office developer, you still need to believe and understand that the market, although it's growing in terms of size and capability of tenants, it's still a very, very small market in terms of the size of transactions. Where the tenants are coming from, in Hanoi, they're mainly coming from around Asia, 76% from around Asia, and only 9% from the States, whereas in the South, 50% from around Asia and 30% from the States. I think you'd expect that. So again, slightly more international market, a more western-facing market in Saigon, and a more northeast-facing market in Hanoi. And I think obviously Samsung is changing that, and then many other companies that are in the electronics field out towards back then is beginning to change that. In terms of office buildings and new supply, you can see here again some very big new buildings coming under construction, and you see here that as I mentioned, they'll take a while to fill. So developers are realizing this and beginning to use a new beginning to see signs that this is a new way of funding or self-funding a building. We're very excited, quite interesting. In many cases, they're writing about the affordable housing sector, so the yields will be 8 to 12%. So again, a very well understood asset class in other markets, and it's exciting to see that it's coming here at last. These are some of the new buildings that I said that will be not strata title, wholly owned, well managed. We're excited that our clients from Lotte are here today, and some of the other ones as well. Lotte Centre will, obviously, it's a very complex, high quality, mixed use project that we're very excited about. As far as retail is concerned, it's been this has been an asset class, a sector that we've always enjoyed, and has been a lot more robust than others. Some international international retailers still find it more attractive to come to Ho Chi Minh first, and you can see here on the right that we're now up to, I think, our 8th Starbucks store. But the good news for those of you who want to taste American coffee is that you'll get your first Starbucks. You'll also get McDonald's. So I won't be able to say to our overseas investors that you're sitting in the one country in the world where there's no McDonald's or Starbucks. That title now drops to East Timor. But there's very few countries in the world that don't have Starbucks or McDonald's. We've survived for 2,014 years without them, but obviously you will see the effect that it has on our young people as they move away from Pho 24 to McDonald's. It's not always good. You have got the Lotte Market, which opened in September, and you have got Baskin Robbins, which opened in Cape in July, so just for the hot weather. And obviously you got Robbins at the Royal City, which opened in May. So although retailing has had a good run in Vietnam, there's still a few issues. Globally, retailers, when you poll them and you ask them what their plans are, whether it's through AC Nielsen, which is a study that we track and that we're using the stats here, good, but you'd expect that to be good in a market of 19 million people. Of course, we're better than the rest of the world. The reality is, when we look at Indonesia, Philippines, Thailand, Singapore, we're still the poor younger brother. In terms of vacancy and rent, these scales are the same. I'm reliably informed, but what happened obviously in Hanoi was in 2013 your supply doubled. So not surprisingly, your rents collapsed and your vacancy collapsed as well. Your average vacancy collapsed. We saw two very big market entrants last year, Times and Royal City. They've certainly done extremely well in finding tenants for the majority of their space and managing the space well and keeping the crowds going. But obviously it had a big effect on other malls where both tenants and visitors turn their backs on their old favourites and turn to the new, well-managed malls with the ice hockey and the water park. CBRE does its own polls as well. We ask our own clients where they think they want to be and why, and what they're looking for, and these are the results here. You can see Vietnam, after 15 years of us begging is now features where both Hanoi, Ho Chi Minh and Da Nang on their list here. So heavy lobbying by Richard and his retail team has got Vietnam on the map of regional destinations for retailers. You can see here that 40% of those that we polled, they want to be so 53% wanted to be in shopping centres, 40% wanted the sweet spot for them was between 100 and 250 square metres. And again, the sweet spot of what tenants want is something that we haven't always listened to. We haven't, going back to my football analogy, we haven't always listened to what the tenants want. And again, if you don't, then you will not get the tenants. It's simple as that. Also, they want, going back to my strata title story, what they want is malls that are wholly owned. They want to deal with one landlord, one manager, one marketing manager, one M&E manager. They don't want to be dealing with 10 different people from 10 different companies. They want they want to look the building manager or the asset manager or the shopping centre manager in the eye and know that he's going to get what he delivers or promises. In terms of new supply, again here, a lot of new supply in Hanoi, in different parts of the city, different formats, and even we're beginning to see projects that were on hold for 5 or 6 years coming back onto the market, so they're coming back into the construction field. Actually, Ho Chi Minh, apart from Viva City, which is obviously a purpose-built development by Mapletree, led by Mapletree, and so we can't on. The others are really inside other mixed-use developments. Mapletree and SC had a big ceremony last week at the Hyatt Hotel where they signed up their 11 key anchor tenants. So they claim they're now 49% committed, which again is a word that I haven't used for many, many years. The concept of pre-commitment is absolutely fundamental to retail real estate, to office real estate, to residential real estate. It's a word that is music to the banks, it's music to the finance directors of big developers, and without it, it means that you've got to fund it, and that funding is extremely expensive. So to go to a ceremony where some big tenants are signing up for some space, it'll be a year and a half, a year before the building will be completed, is very, very exciting. It certainly shows that confidence at the user level, at the end user level, is increasing. And after 5 years of not seeing any confidence anywhere and challenging stories, it's good to see that it's creeping back. In terms of hotels, again, it's great to be in a hotel like this and to use their ballroom. This is probably one of the nicest hotels in the whole of Vietnam, if not the nicest. So thank you, our friends from Vietnamese, who allowed us to use it today. However, the whole story of Vietnam hospitality, the hotels need to be looked at as a whole. We need to appreciate that the vast majority of tourists are still Vietnamese tourists, so the 1- and 2-star market are very, very important. And often, when it comes to CBRE, don't give them the attention that they deserve. The affordable hotel sector is just as important as the affordable housing market. We tend to focus on 3-, 4-, 5-star hotels, but the reality is, again, my substitution story at the start is important because now we're not going to see those 4.5 million mainland Chinese tourists come to our hotels in Hanoi, and particularly in Da Nang and Nha Trang. We're going to have to find substitutes, and if we don't find them quickly, we're going to lose that market, and those hotels are going to either go out of business or the quality will drop dramatically. So we saw on the front page of the papers yesterday the government addressing this issue. It will be unfortunately probably too little too late, but the reality is at least the government realises that if someone scores 5 goals against you, you've got to have a substitute. You've got to have plan B. It's a little bit too late, and it may not be enough, but the reality is, you can see from these numbers here, that most of the airlines that were bringing in tourists from mainland China have stopped. Unless we bring those tourists from Korea, from Taipei, from Hong Kong, from Singapore, again, there's our friends in the middle of the country and the big hotels here will begin to really, really feel the pain. So substitution is an important word that I want you to take away today. What is plan B? We're very good at plan A, but when it doesn't work out, which it often doesn't in Vietnam, you need plan B. You need to have it plan B right in the front of your mind, not at the back of your mind. I think probably many of us have realised that now. Having said that, though, there seems to be an awful lot of money going back into either the second home market or to the hospitality market. It's right across the country, all the way from Sapa down to a name. Another thing I haven't mentioned for at least 5 years is Phu Quoc. My staff have been begging me to take Phu Quoc seriously. Last September I went and ran a half marathon there. I ran along the beach for 10 kilometres one way and 10 kilometres back, and I saw loads and loads of half-finished projects. I got very red sandy shoes, and I counted in the 2 hours that it took me to run, I counted 1 aeroplane land. So I wasn't hugely confident about Phu Quoc, but my colleagues reassured me, and we've now written a white paper which is an awful lot more positive about Da Nang. Clearly the Prime Minister and his encouragement of some of the big local companies have meant, and hopefully the adjustment of the airline timetable and the opening of the new terminal will mean that what happened in Da Nang will happen in Phu Quoc as well. There's still a lot of infrastructure that's missing, but the reality is Phu Quoc we should now take a lot more seriously than before, particularly if flights can fly directly from Hanoi to Phu Quoc. Again, it will make a difference for those of you that don't see as much sun in the north as we get in the south. Just in terms of investments, this is a market that we track, and it's certainly the lifeblood of CBRE globally. This is a market that in the States and in Europe and the Middle East and in Eastern Europe we dominate. Here, unfortunately, the problem we have is not the fact that there's no buyers, the fact is there's no sellers. So if you've got a building you want to sell, please come and see me afterwards. There are buyers in the local market. There are buyers that are coming from Tokyo, from Seoul, from Singapore. The problem they have is they can't find available, motivated vendors. It's not necessarily the price that is some of the problem, but it's the terms and conditions and the transparency, which I'll talk about in a minute. We tracked, I believe, 26 transactions since the beginning of the year. These are some of them in Ho Chi Minh, some of them in Hanoi, some of them existing buildings, some of them half-finished structures, some of them hotels and service departments. We are noticing that yes, there's a lot of money coming from Asia to places like London and the US, but there's still a lot of money, particularly family office money, that's interested in Asia Pacific, and particularly as markets like Hong Kong and Singapore become so expensive, with yields dropping below 3 or 4%. The reality is that Vietnam, even though it may not be as attractive as Jakarta and Manila and KL and even Bangkok, the reality is that our yields are still very high regionally when you compare them to other markets. What the problem we still have, though, is the valuation between the bid and the offer price is still very large. The spread, I should say, that the amount of transparency isn't high enough yet for many incoming investors. The structuring of the transactions, where many of the local parties want to avoid any tax altogether, tax that maybe they shouldn't have been paying over the last few years, and obviously the track record again. So the 4 areas, this is a slide that we use every big breakfast and Phyllis Foremost. The gap hasn't really closed, it's still the big issue. And as I said, we talk to investors all the time. At the beginning of the year we thought, I stood on this stage, actually in the Hilton, and said, we expect the mainland Chinese market to dominate the Vietnam market this year. We expect to see a lot of money coming from Shanghai and Beijing, where the market is slowly, the bubble is slowly dissipating. And we were wrong for various other reasons, but the reality is the mainland Chinese accepted the valuations, the transparency, the structure, and in many cases the lack of track record. But if it's back to the Japanese, the Koreans, the Taiwanese, the Singaporeans, and the Hong Kong Chinese, then they want to tick all 4 boxes. And if they can't, they'll walk away. However big or attractive the yield is, however good the covenant is, however good the design of the building is, they will walk away. because they have rules and regulations that they have to adhere to. So we really need to raise our game here. Again, when you look at those 24 transactions that I talked about in the last slide, 63% of them there was a foreign component. Either the buyer or the seller, 63%. 37% were Vietnamese to Vietnamese. So still, foreign money has a role to play here. You may not like it, you may not want anything to do with it, it may cost more, there may be a bigger cost in terms of transparency and valuation, but it's still there. And obviously some of the foreign groups are actually sellers, because maybe their investment license is running out, and maybe they see this as a good time to sell because it's just a little glimmer of confidence in the market. Of those 63%, 73% of those foreigners have been in Vietnam for more than 10 years. So what I'm saying is that, yes, there's foreign money, but it's really money that's been here a while. It's the funds. It's companies that came here in 94 to 2000. Those are the guys that get it. Those are the guys that are comfortable in our world, in the Vietnam story. Trying to persuade a new investor from Singapore or Hong Kong or Tokyo is extremely difficult. So the rice bowl isn't getting bigger. If anything, it's getting smaller. It's just a thought. It's an area that we're worried about. We would love to see the rice bowl get bigger, not smaller. It means those of you that have got assets that you want to sell will find it easier to sell, easier to transact, cheaper to transact, and obviously get a better price. But if the rice bowl is getting smaller and there's less buyers, then your present asset values are not going up, they're going down. So, what do we think will happen for the rest of the year? Just a few slides to finish up on. We don't think the Trans-Pacific Partnership will be signed this year. In fact, we're sure it won't be signed this year. The EU free trade agreements and the Korean and the Russian free trade agreements may well be signed. But because of the intransigence of the American Congress, then they won't get the approvals that are required to fast-track the TPP. I'm sorry to say it, but I'd rather we addressed it, was that Asia-Pacific countries will put their relationship with China above their friendship to Vietnam. They may whisper very nice things in our ears, but the reality is trade creates jobs from the demographics that are similar to Vietnam, in Indonesia and in other markets. They will put trade ahead of friendship. There is certainly some fallout of the demonstrations that were happening in the south and in Hà Tĩnh, but it's difficult to see, apart from the hospitality sector and the hotel sector, just at the moment how far and how long it will take to wash through. Certainly the Taiwanese and the Korean factories, owners, manufacturers that had their factories and warehouses burned down are very, very bruised, extremely bruised. They're getting their act together again. The government is helping them, but they're certainly too little too late. And they're uncomfortable, and we don't know yet whether they will reinvest. Of course, we hope that they do. But at the moment, there's no sign of them pulling out. I would imagine they're using this as a negotiating tool. All the big macro numbers, our stars are aligned. And as I said, as long as GDP can go from 5 to 6 to 7 back to 8 again, then I think that's a very, very good story for us. It doesn't mean to say we'll get back on the front page of Time magazine anytime soon, but the reality is at least we're going forward now, not backwards. The infrastructure continues to amaze, and obviously as you drive past and you see the very congested areas where they're doing these roadworks and big infrastructure things, we need a little bit more patience, but if it turns out anything like it did in Bangkok, then it'll give us a huge amount of breathing space for us and for our children over the next 30 years. The SOE equitization, which was a hugely discussed topic at the end of last year, and the 350, 400 companies that were being equitized. We see an awful lot about the big 10, but we see very little about the other 300. Again, I worry because this is an area, again, that Bloomberg and Reuters and the BBC and the Wall Street Journal spend a lot of time on.
If Vietnam can get its SME issue right, then it gives us a fifth move. It gives us a lot more credibility in terms of global funding, particularly regional funding. As I said, Jakarta and Manila are getting all the attention. Affordable housing, I'm sure you, or should I say in the Hanoi situation, more affordable housing is getting all the attention, grabbing all the headlines. I stood here in January and talked about foreign ownership and foreign ownership levels for the stock market, foreign ownership in terms of land and property. Again, we're no farther ahead, and I think the issues become very, very murky. People are getting mightily upset. I probably get more emails regarding that than any other single issue. Developers are dusting off their plans for some bigger projects. And I see here today a few township developers. And again, you must be feeling an awful lot more confident than you did a year ago. We're going to see more cranes on both sides of the river. Obviously in Ho Chi Minh, we're going to see more cranes in District 2 and in District 7. As prices come down, you can see those pyramids. As prices drop down, affordability increases. I mean, how clever is that? You've got to be the managing director of CBRE to spot that. I mean, that's the bleeding obvious. So I'm glad it's happening, and the more people that see that, they've got that money, they can get a loan. What they could have bought 5 years ago is an awful lot more, sorry, what they can buy now is an awful lot more than what they could have bought 5 years ago in terms of quality stock, deliverable, and design. Again, we're seeing the mid to the high-end markets, we're seeing more end users. Again, we are seeing the buy-to-let market emerge. It's very, very strong in areas around the big international schools and near the CBD. Over the last 2 weeks, we ran a couple of series of marketing events. Maybe a couple of you came with another service provider group called Red Brand Builders, where we were saying that if you use the same marketing techniques that you used 5 years ago to sell your product, you are going to lose. You're going to lose big time, because the market and the buyers and the way that we buy practically every good and service, even our banking is now online, and the way that we get our information is almost exclusively online. Many of you are addicted to staring at your smartphone, and you get most of the information that you use on a daily basis, whether it's the newspaper that you used to read, now you can read it online, and you read it on your smartphone. When you get to my age, you need a very big font. I didn't send a single SMS out over the last 2 weeks of this event. 6 months ago, a year ago, I would probably be forced to send out 200, maybe 500 SMSs. Now we use Viber, and we use Campaign Logic. The effect is much better, and it's much easier for you. And that's the way you want your information. You want to be able to store it, revert to it, read it at your leisure, read it in the car, read it in a traffic jam, read it when you're waiting at a meeting, before a meeting. So again, this has changed, and people that aren't getting it are going to lose out. I still get 12 to 15 SMSs a day from developers telling me about their project. I just delete them immediately. And I'm sure many of you do the same thing. So again, WhatsApp and Viber are making a big difference to the way we work. And just a couple more. Obviously, when rents go down as much as they have done in Hanoi, and as much as they did do in Ho Chi Minh, it really makes sense to lock in a 5-year deal. So those of you that are tenants, this is a very, very, very sweet spot in your market, and you need to use all the willpower you've got to persuade your head office to allocate funds in 2014, 2015, because if rents go back up again, those deals will disappear. Those rent-free periods that you may have been used to for the last year have disappeared. For some of you that are over the hump, it's probably you've signed a big amount of relief, heaving a big sigh of relief. The investors, the companies that are coming to Vietnam, as I said, are very few and far between, but luckily that there are a number of particularly Vietnamese companies and companies that have been here a long time. So the companies that have invested here, particularly the first movers, the early movers, the groups like Coca-Cola, Pepsi, Unilever, Nestle, Procter & Gamble, those types of companies have all reinvested and reinforced their investment into Vietnam. And there's obviously not just in manufacturing and logistics, but also in real estate. Please don't hold your breath if you're waiting for a big wave of new investors into the office market. I don't think it's going to happen this year. I'm excited about the strata title rules, but I'm not excited about the rules that are going to wrap around it in terms of the deed of mutual company, DMC. And that's the responsibilities that all owners have to the property and to each other. I couldn't help, my colleagues couldn't help but put one more a football analogy in here. Probably some of you know that Luis Suarez is leaving. He's probably leaving Liverpool to make his way down to Spain, where obviously people are more tasty to eat. But certainly we have seen a market that grew too big, too fast, and English colloquialism is we've bitten off more than we can chew. And once you've bitten off more than you can chew, you need a full and frank discussion afterwards. What went wrong? How did we let this happen? What can we do to make sure it doesn't happen again? What were the checks and balances that we didn't have, that we need to have next time around? And obviously, that conversation is extremely expensive because it's happened and you need to sort it out. So full and frank disclosure, some people call it transparency. But transparency within your sector, within your company, within your investment team will be required going forward. Just a few words about retail. Obviously, as the WTO issues finally get to Vietnam, the market will become hopefully totally open. Some of you that are in the retail business, where you're opening stores in Ho Chi Minh and Hanoi, the challenges that you have in Hanoi, and I'll be very careful how I phrase this, are still very much higher than we have in Ho Chi Minh for opening a second, third, fourth and fifth store, particularly in the F&B sector. So again, the rules and regulation and interpretation of the rules and regulations regarding licensing seem to be two different, be interpreted by two different teams in two completely different ways. And it's a shame to see that, because obviously when retailers come to Vietnam, they want to come to Vietnam, not just to Ho Chi Minh City, they want to come to Hanoi as well. So please again, continue to lobby your colleagues your contacts in the government. As I said, the retailers that do come are looking. It's 56% want to be in managed malls where the manager is the owner, or the manager is appointed by the owner. And on the final note, we believe Edward Snowden will be holidaying in Phu Quoc soon. We hope that will mean that we're able to get more Russian tourists. And again, I've got to eat huge amounts of humble pie. I have written off the second home market in Nha Trang, and in Da Nang, and in Phu Quoc. And it clearly, we need another look. It's certainly the numbers of tourists that are going to certainly the southern cities of Nha Trang, Hue, Phan Thiet, are actually creating quite an interesting atmosphere. It may not be at the Marriott level, the St. Regis level, the Four Seasons level, but it may be at the 2- and 3-star level, which is, as I said, a much more sustainable market where we see an exciting area. My colleagues have put one more thing, I apologize. So, looking for well-priced assets. Give me any asset that's for sale first. The well-priced can come later. We've still got the market, certainly the office market's moving in two different directions with your fully supplied market. To a certain extent, the retail market, again, we've now got double the supply of shopping malls and purpose-built malls in Hanoi that we have in the south. So again, I'm sure there'll be a rebalance in terms of rents there. We've still got a few unfinished, unloved skeleton buildings where developers have got to have that full and frank discussion with their managers. So what I'm saying at the end of the day, and I don't know how this translates into Vietnam, because I see 4 words there and I see 9 words there. But in English we say, well, if it's not going to happen now, when is it going to happen? So in July and October we do viewpoints and special reports on subjects that we think are important to the market, such as the Phu Quoc, such as the opportunities in the retail sector, the one on the Golden Arches, McDonald's. We also talk where we can about their foreign ownership. Again, we are a bit of a mouthpiece for the industry. We also do a weekly newspaper update on which companies are advertising their products this week. It's very difficult to get sustainable, credible information from every developer in the room, so we don't just ring you up and ask you what's happening. We also try and track how you're spending money in newspapers, what you're advertising, what prices you're selling at, how many units, what sizes there are. So we do that on a weekly basis. So a weekly newspaper update. We do a monthly dashboard talking about the macro, the moons, which direction they're pointing in, and then we do a market view as well. So thank you for coming. We very much appreciate that you've come all the way to the Marriott. For those of you that live at Cape Town, I hope you can walk home for lunch. We would appreciate if you could just open up the green file, and I think inside is a questionnaire. If you're able to fill that up and either leave it on the table or give it to one of my colleagues, I would be hugely grateful. So on behalf of CBRE, that's what we call our big breakfast. I believe there's still some biscuits, coffee and fruit available. The market's hard, so maybe next time we'll go back to a bigger breakfast or an even bigger breakfast. Thank you for coming. Thank you, my staff, that put this together. And hope to see you again in January when we deliver our fairness forecast. But more importantly, I hope your market is getting better. I hope we've analysed some of your situations and the market situations and the city and the country's issues. And as I said, this is just our view. We've worked hard to make sure the information is accurate. And if it isn't, come and see me right away. Many thanks.